Welcome to the Rick Helps Real Estate Show. Today we're going to look at a headline that came out on MarketWatch that said that Phoenix leads the nation with the highest percentage of price cuts for real estate, and that is true. But, however, there's always a little devil in the details, and I'm going to show you what I'm talking about because you know what? We've been here before. Let's first look at the numbers right now, and then I'll show you what I'm talking about, and then we'll go over some of the numbers in the Phoenix market and show you where we're at, especially recapping after this week. And here's where we're at: Phoenix, Mesa, Chandler, Arizona. That's how they categorize it. Share of listings with a price cut, 32%. It also says the median listing price as of May was $525,000. Second place for price cuts is Florida, and then followed closely, almost matching, is Denver, Jacksonville, Florida, Austin, Texas, Dallas, Fort Worth, Portland. That's an interesting one. And again, back down to Florida, Las Vegas, and San Diego. So we have more price cuts than Las Vegas. And here's our actual numbers, though. These are the price cuts, number of price changes per week. Here's where we're at here at 3,243. But look at 2022. We were considerably higher. Now, I just showed you a chart that said that we were number one. Well, we were higher back here in 2022, but we probably weren't number one. There were other markets cutting as well. This is when interest rates went flying up. A lot of our price cuts showing up were based on the iBuyers. Open Door was trying to clear out their inventory. So that had a huge impact. I think about 1,800 of those homes were Open Doors at that time. So we've been here before as far as the number of price cuts. The percentage was considerably higher back here in 2022. Back here, when you're looking at 4,427 homes, we only had 18,000 homes on the market. We're looking now at 3,243 homes, and we have a little over 26,000 homes on the market. So the article is correct. We do have a high percentage of price cuts, and that's just where we're at. People are adjusting because the market is slow. Here's where we're at on our active inventory. I've been saying that we were going to flatten out and decline. Well, we have hit the flatten out part. This little downward spout right here is just Memorial Day and Mother's Day. And but we're not seeing a whole lot of new listings coming on. I've kind of updated my chart here, made it a little easier to read. That big yellow spot is new listings, and the dark line is new contracts. Notice how they're sputtering; they're going down, but it's kind of flattened out a little bit over the weekend here. But we're down to 2,600, and I kind of thought we'd be hanging around 2,900. So we're lower than what we thought. So as long as we have that gap between the two there, between new contracts and new listings, there's going to be pricing pressure on the downside. Now we take another look at it, updated here, accepted contracts weekly. You can see here we had the highest amount of contracts for the year came in March 29th, and now we're down to 1,621 here for Saturday, June 14th. So we're definitely going down number of contracts. Most of that as we get into June is seasonal, but let's not ignore the fact that affordability is making it very hard for everybody to get into a home right now, and it's showing up in droves. And what's happening as prices are starting to go down, that makes people wait even more. Ooh, it's going down. Why get in now? I think I'll wait. It could go down even farther. We never know where the top is, never know where the bottom is. Nobody rings a bell. But when it starts to go down, that's when people wait. Week ending June 14th, average days on market, 42. Here's the average list price per square foot. And this is, if you're a buyer, this is where you want this to be. It's been going down since a peak again in February. Remember, everybody's always optimistic between January and February. See this? January 25th, and everybody starts asking more for their homes. And lo and behold, it doesn't show up. Oh, wait, they did this last year. Everybody was very optimistic, went up, and they started lowering the price of their homes. They get into spring, March, April, and list prices come down. We're going to do that again. We've already done it. So we're going to muddle around down here in the summertime. Here's another number. This is showing from calculated risk, showing how many, let's see, this is how many closed sales that we've had. Now, this is lagging data because closed sales for the month of May is going to be contracts that were written in April. This is May 25th. So you've already seen that the numbers gone down from there. So the May numbers that we'll get in June will be even lower. 6,954 contracts this year, 7,400 last year. That's a 6.3% decline in contracts, not prices, contracts. Everybody seems to like to compare us to 2019, back when things were supposedly normal, pre-pandemic. Back then, we sold 10,341, so we're 32% below that number. Very interesting. That goes to show you just how slow the sales are right now and how much harder it is for sellers to get their asking price. This is our Cromford Market Index chart showing that everybody's down except for Paradise Valley, but Paradise Valley is a very small sample, not that many homes. Now, I put this in my newsletter. It comes out every Monday morning at 7 o'clock, and it looks like this. So you can really take the time to look at this, and you can scroll down and you can look at you can read their commentary here from Michael Orr from the Cromford Report. And this comes out every Monday morning at 7 o'clock. You can get the link down below. I've added something fun, though. I had a little link down at the bottom there that says, see this week's weather, events, and entertainment. And that looks like this. So you can click on that and see, oh, gosh, we have an extreme heat warning. I'm going to refresh this because they were putting the wrong weather data out there. And I told them they needed to correct it. And by them, I meant artificial intelligence. Anyway, it's not refreshing it here on this sheet, but this is what it looks like. It gives you movies this week, gives you summer activity recommendations, entertainment and activities, concerts and festivals. So take a look at it. It's a lot of fun. It's going to automatically update every week. Now, this chart has not been updated as of May 1st. For some reason, they don't get to it until almost the end of the month. But I want to highlight this one section that I always do, and that is, see the blue line? That is the supply index. The demand index is the red line. Now, the demand index as of May 1st was going slightly up, but they were being outpaced by the supply index. While these are a little bit closer, they were a little bit closer, they're starting to separate yet again because the demand index is starting to slip. Until these meet, prices are going to come down, asking prices. And in a couple of months, you're going to see it start showing up in sales prices. Real estate's nothing more than supply and demand. The reasons you have more supply or you have more demand change all the time. But this is the bottom line, folks. Until these numbers meet, right now they're spread apart, there's pricing pressure on the downside. And that's what we're seeing. I think we're going to see that the rest of the year, maybe even longer, but who knows? There are prognosticators out there going, oh, I've seen that mortgage applications have gone way up this month. Actually, they're down 3%. So be careful what you read. When you see headlines like that, do some digging and take a look. You can go to Mortgage News Daily, and they'll tell you right there where it's at. So mortgage applications are not expanding. Buyers are not coming out of the woodwork. They're waiting. Sellers are having to get far more aggressive in selling their homes. And here is the monthly average sales price per square foot, seeing that it's been going down since, well, January. January peaked at $316 a square foot, and now we're down to $296 a square foot. We had the big run up here when, if you look at this, here's March 21st, right? Well, let's go back to that other chart I just showed you. What was going on around March or in 2021? Look at the gap here between activity, sales activity, demand, and listings. That gap was huge, okay? There weren't enough listings. There was an incredible amount of demand because interest rates were so low, and it's reflected in this run-up right here. So having said that, when you see this, if you go back and look, here's the extreme on the other side. This is when the wheels fell off the wagon. We had the financial crisis. You had a supply index way in the stratosphere. We had 55 to 58,000 listings out there, and nobody could buy. Everybody was foreclosing. So that gap was extremely large on the opposite end of where we are right now, and it reflected in this huge price decrease. So if you just want one simple indicator of where we're at today, it is we're right here. Supply is going up. Demand is soft. Prices are coming down. We're seeing it in the contract ratio here. Boy, oh boy, see that little white area there? That's called a balanced market. Guess what? We are knocking on the door of what's called a cold market. The number here says 29.9. They have the cold market here hitting at, oh, what do they say? I think they're saying it starts at about 29. So we are right there in a cold market. Cold market when it's 115 outside. Go figure. Here is the Case Shiller home price index. They're pretty accurate. It's not home prices, it's an index. And we can look and see it. Phoenix here has flattened out. I think we came down here in July of 2022. That's when interest rates were going up, folks. Then we had a little respite here, going up a little bit in 23 and 24, and now we're flat, according to their index. What are other cities looking at? Well, everybody's saying, well, Los Angeles, man, their prices are plunging. Well, not according to the chart. For reasons I don't understand, we layer in San Diego there, and they're right along there, prices going up. Get rid of Los Angeles and take a look at San Francisco. San Francisco had a little blip up. Seattle's had a little blip going up. That's kind of a unusual one. And Dallas is kind of flat, just like us. The same with Denver. Denver's kind of flat. So that's just a supply index. It's just another interesting thing to look at as we look at our market. The central bank did not lower rates this week. We're still sitting at 6.91. That's controlled by the 10-year treasuries and the bond market. And the bond traders, again, just like buyers, sitting on their hands. Sellers are waiting. We had a huge number of expired listings at the beginning of the month where sellers had tried. They couldn't succeed. So they're going, I'm just going to wait for better times. A lot of things floating in the air right now. We've got conflict in the Middle East, concern over oil prices, concern over tariffs, concern over a tax bill. Nobody likes to pull the trigger and make decisions when there's uncertainty, and that's true in the bond market. As long as there's uncertainty in the bond market, demand is going to be weak to buy bonds. That's going to put pressure on mortgage interest rates. The pressure that's being applied is not raising the interest rate. It's kind of letting it sit right there between 6.8 and 7. It's staying there. Now there's a little chatter. Well, there might be a rate cut in July. Probably not. Hard to tell. Trump's talking about firing Powell. Well, that's a headline. I don't know if I believe it or not, but they could come in and reduce our interest rates by 0.50 at the central bank next week. I don't think it would make 1 ounce of difference on how bond traders are reacting to the market. So this 6.8 to 7.0, we're going to be talking about that before Thanksgiving. It's going to be 6.8, 7.0. Maybe if we're really, really lucky, it'll be 6.5. I don't know. I'm no bond expert, but if I look at the trends, I look at what can move, can't move, I'm not seeing a whole lot of differences showing up. So that's what we've got going. Hey, if you have any questions, shoot me an email at rick@rickhelps.com. Take care.